Okay, welcome back everyone. So in this session, we're going to look at the assignment and give you some feedback on that. So let's quickly look at how was the results for the assignment. So the top student achieved 83%. They would have actually received more, but a lot of students actually lost marks due to referencing. The average for the assignments was 62, which is not that great, seeing it's an open book thing. Now, where a lot of students went wrong is with the bank reconciliation, specifically, students struggled with that, and then with the debtors statement that you had to do. So there were a few things which people got wrong there. So one of the things similar to the test is students did not show their workings, and there was some basic concepts you were struggling with, or you didn't read what was actually asked, and then you just did something completely different. Now, let's quickly look at, just going to stop sharing here, and then just share the question before I show you the solutions. Okay, so let's quickly go through the question. So the first thing you guys had to note was on your front page, and this is why a lot of students lost marks for referencing, is they've actually specifically included this year on the front cover that all work must be adequately and correctly referenced. So that means you had to show in-text referencing and you had to show bibliography. Now, the only place where I actually looked for in-text referencing was for question 1, where you had to explain the adjusting entries. For the rest of the things, because it's application, you wouldn't necessarily reference it, so it was only more the theory type questions where we penalized you for referencing. Okay, so let's quickly go through question 1 and see what you had to do, and then go through the commentary. So for question 1.1, you had to describe in your own words the difference between an adjusting difference and a timing difference. Now, because of the whole question was based on the bank reconciliation and that process, these timing differences and adjusting differences refer to the bank reconciliation process and not to your financial statements. So a lot of students got confused and they were explaining any type of difference rather than what we were busy with. So they lost 6 marks because of the fact that they did not actually apply it to the question and the information in the question. Then the second part, you had to do your subsidiary cash book receipts and your subsidiary cash book payments, where you had to give the amount before the adjustments and show the adjustments. Now in this question, students got confused between what should be included on your cash book payments, what should be on your cash book receipts, and what should be on your bank reconciliation. So when I marked this, there was a lot of information that you done correctly, but you indicated it on the incorrect place, and then you've actually lost the marks. So we're going to discuss today as well, how do you know what should go where? And then the last question, or the last few questions, you had to prepare a bank account. Now, for that bank account, your opening balance would have come from your prior month's bank reconciliation, and then your total receipts and total payments would have been linked with what you've worked out in question 1.2. Now, some of the students, that process didn't follow, so they went and worked out a total receipts or total payments amount separately, and then it looked completely different to what they've worked out on 1.2. Similar to the bank reconciliation, the bank account balance at the end should agree to what you've got in question 1.3. That is how you see if you've made a mistake, if it's reconciling. Now, in some people's questions, those things did not marry up, or you put the wrong bank account balance, you put the prior month's bank reconciliation bank balance there, or you didn't even reconcile it to that. And then the last question was, based on the information, you had to identify 2 problems and provide advice to the owners. Now, based on what you guys provided, we had a look, and if it was something that was plausible, or I could see, yes, based on the information that would be reasonable, I would have given you the marks based on how you've argued it. So let's quickly go through question 1 and then see what you had to see. So question 1.1, this was the prior month's bank reconciliation. So that was your balance per your bank balance was per bank statement for the prior month was 17,200. Now then we go through the reconciling items. So at the end, when you're done, you need to have ticked off all of these items on your prior month reconciliation. So they should have either already gone through your bank statement, or I have to put them in my cash book receipts, cash book payments, or I put them on the bank recon again. Okay, now this balance at the end per your bank account, that is what you would have used in question 1.3 when you do the bank account general ledger. That is your opening balance. Because it's favorable, you know it is a debit balance. Okay, so I'm just going to write here the debit balance. Now, before we can tick off all these things, I had to read through the additional information. So let's quickly go through the additional information. They tell you check 2651 appeared on the bank statement in May. So I know it's on the bank statement, so I tick it off there, and I go to my prior month's recon and I tick it off there. Yes, it's gone through the bank statement. I can take it off my bank recon, so it has been accounted for. Deposit on the 30th of April appeared on the bank statement. So the deposit is now reflecting on the bank statement. I can tick it off there, and I can tick it off my bank recon. Then check 2001 has been cancelled, and that was to a charity organization. Now, originally when we did it, it would have gone through the cash book payments. Now, if we reverse it, then we put it through your cash book receipts amount. So now what I do is on that thing, on the bank recon, I write your cash book receipts, and once I've entered it in the cash book receipts, I can tick it off. Then I know I've dealt with that item. Then they talked about an outstanding deposit of 8,500 was in respect of cash receipts for an outstanding debtor. That this deposit has not appeared in the May bank statement. So we received the money, we've included it in our cash book receipts, but it hasn't physically gone into the bank statement because it was never deposited. And the owner has authorized that the amount is written off as a loss and it's due to theft. So what they're basically telling you is before that money even got to the bank, it disappeared. So because I initially recorded it in the cash book receipts, to reverse that entry, I have to go put it in the cash book payments, and my description then would be it's a loss due to theft, because that is what happened. Okay, so this amount here, the 8,500, will no longer be on the bank recon, but it will go to the cash book payment to reverse it. Then they made a comparison between your bank statement and your cash books. Now, what I want you to remember, if it's on the bank statement, but it's not in the cash book, you either put it in the cash book receipts or the cash book payments. Now, anything that is money that's coming in goes to the receipts. Anything that is money going out goes to the payments. Okay, so that is the general rule. If it's in your cash book, so it's recorded in our cash book receipts or our cash book payments, then we add it to the bank reconciliation. Okay, so that means it has not gone through on the bank statement yet, so it needs to be reflected on the bank reconciliation. Otherwise, our balance on the bank statement will not reconcile to what is on our cash book or in our accounts, general ledger. So let's quickly see what transactions was there. The first one was bank charges of 530 were not recorded in the cash books. Now, bank charges is an expense to the company, so we take it to the cash book payments account. Then they tell you check number 2712 was issued to a creditor. It appeared correctly in the bank statement at 5,630, but was incorrectly recorded in the cash book payments as 6,530. So what happened is we've actually recorded too much money in our cash book payments system. Now, how do we correct it if we've made an error in the cash book payments? We go correct it in the cash book receipts. So what's in the bank is correct. It's just in our books we've made an error, so that amount needs to be corrected in the cash book receipts. So that is what you had to see in here. Then we've got our insurance payment of 1,800, which goes through our cash book payment. So for this one, you do not say it's a stop order, you say it's for insurance when you write the description. Then we had a dishonor check, so that's an RD check of 2,355 Rand that appeared on the bank statement. So that means we received money from our debtor, which was in our cash book receipts. That check now bounced. We're not getting that money, so we now put that RD check into our cash book payments for the amount that is the 2,400 Rand. And then interest of 480 was received from the bank and not recorded. When we receive money from the bank, we include it in our cash book receipts, which was the interest received. And then they tell you the following entries appeared on the cash books and not in the May bank statement. So it's items we have recorded, but it hasn't physically gone to the bank yet. So these items will always be on your bank recon. So we just add the outstanding deposits on our bank reconciliation as well as the outstanding checks. And then they tell you your bank statement balance is 815 is your favorable balance. So that's your starting point of your bank reconciliation. And your totals for your cash books before adjustments is these amounts, which you then use for question 1.2 to do the reconciliation. Now, after we've read all of that information, you then go back to your prior month's bank reconciliation and then look and see, is there anything that's left over? So we've ticked off everything except that 11,330, which was check 2691. Now we haven't seen any additional information on that. So what that means is we still leave it on our bank reconciliation when we physically do it. Okay, so I'm going to just share my slides again, and then we're going to look at what should your answer have looked like. Okay, just hold on. Okay, so for question 1.1, you would have explained what an adjusting difference and a timing difference is. Now, I've indicated on here where in your textbook you would have found it. So you would have found it on page 4 to 5 in your prescribed textbooks. So they tell you adjusting difference is a difference where the business is not aware of, when the business is not aware of a particular transaction that has been recorded in your bank. And an example is your direct deposits, bank charges, interest on current accounts. Any of those would have given you a mark. Timing differences is when we've recorded it in our books, but the bank is not aware of it, so it hasn't physically cleared the bank's accounts yet. So that is outstanding checks and outstanding deposits. Sorry, that's supposed to be a deposit. Let me just... Okay, so it should be deposit and not a check. Sorry for that. Okay, so that was question 1.1. So it was pretty straightforward. Now for question 1.2, students swapped these amounts around. So Some of the items that were supposed to be on the cash book receipts ended up on the cash book payments and vice versa. Now, what you had to do is you started with your adjustments or your amounts before any adjustments. Those amounts were given to you. Then your details, you need to give me a description specifically of what it is. So if it relates to a specific check, you write check and you give the number. If it is a correction of error, you write there it's a correction of error. You do not write it is. The most common things which we saw was for the loss due to theft, as people said, money was stolen. For the insurance, people wrote debit order, stop order, debtors control was the RD check. Now, if you wrote the RD check, I gave it to you because we explained it as such. For interest received, if you wrote interest income, I still gave you the mark as well. So as long as your description was similar to what it should have been, you would have received the mark. If it was completely off the mark, I wouldn't have given it to you. And if you put it on the incorrect cash book journal, you would not have received the mark. So the adjustment entries that went through the cash book receipts was the check that we cancelled for 2,220 Rand. Then the correction of errors, so that is where we recorded more in our cash book payments than we should have. To correct that mistake, we put the difference into a cash book receipts, and then the interest received but not recorded. And then this total receipts amount should have been transferred to question 1.3. Okay, so the total receipts. Then for your cash book payments, the amount that we have written off because it was stolen, you should have written it's a loss due to theft, which was the 8,500. Then our bank charges, which still needed to be recorded, our insurance payment of 1,800 that went through, and then the RD check for your debtors of 2,355 Rand. And then you would have added all of that together to get your total payments of 17,685. Okay, so that is how you were supposed to do your cash book receipts, cash book payments. Now then for question 1.3, now we had to do the general ledger account for it. So the first thing is you take your opening balance and that you get from your April bank reconciliation. The closing balance on that is your opening balance for your bank account. Then your total receipts, total payments, that should agree to what you had in question 1.2, and you would have received the method mark for transferring that information. You would have received half a mark if you wrote your total receipts as well as the correct folio number. So it's a cash book receipt or a cash book payment. If you left out that information, you would have lost that half a mark. Then by balancing it, you would have received a method mark for the 30,915, and then if you carried it over to the following month for the 1st of June, if you worked out this correctly, you would have received the mark. If you made a mistake, you would have lost that mark. So someone that did it correctly would have received full marks, whereas someone that made errors would have received 1 mark less. Okay, now once you've done that, you would take this balance, would be what you would reconcile on your bank reconciliation. So you'll see here at the bottom, our balance per our bank account is the 3915, which should agree to question 1.3. The opening balance is what they've given you in the additional information, and because it's favorable, you show it as a positive. Then your outstanding checks. The first one we said we carried over from our April bank reconciliation because there wasn't any additional information that showed that it has been dealt with. And then the other outstanding checks and deposits would have been from the additional information, what was recorded in the cash books, but it has not actually been reflected on the bank statements. What I want you to note is you need to show when you show the outstanding checks as a negative. If you showed it as a positive and I could see you deducted it to get to the balance, I still gave you the marks for it, but please in the exam show it as a negative to clearly indicate what is a debit, what is a credit balance on your bank reconciliation. And if you take the opening balance, you add all of these movements, you should get back to this balance. If you don't get back to that balance, it means you've made a mistake. You either included something on one of the cash book registers or journals that shouldn't have been there, or you have indicated the symbol incorrectly, or you had a transposition error, so you accidentally dropped a number, which also happened. So a lot of students forgot the 70 or the 20 or the 30 Rand indicated on some of these amounts because they got busy or stressed or whatever the case may be. Then for question 1.5, the type of advice we were looking for, so you had to state a problem. Now the first problem that you would have seen is 8,500 Rands cash was stolen. Now that is the problem. Now how do you actually encourage someone to address that? They could address it by encouraging direct deposits, reconciling the actual duplicates of cash receipts issued and when it's recorded, or segregation of duties. Segregation of duties is by having someone else take it to the bank rather than the person receiving it. Then the other thing is the amount that has not yet been deposited. So the amounts we've received on the 17th, we've still not deposited yet, or the rolling of cash into the incorrect bank account. That could be potential problems. So an advice you could give your client is that they should deposit the things on a daily basis to avoid these errors. So these were the main issues. Some people also indicated cash flow problems, which is difficult to see just from a bank reconciliation, or the fact that they're insolvent. You will not see it just from that information. So if you told me that, I did not give you the mark. If you said they are overspending, you will not necessarily just see that from your bank recon. For example, the RD checks, for that one, if you said they need to perform credit checks for the debtors and manage that process better, I would have given you the marks as well. Okay, so that is question 1. Do you guys have any questions on question 1?